Hi everyone and welcome to Lendi's monthly financial and property update this month. We are in August. A lot has happened since we last spoke to you in July. Obviously we are in the middle of another lockdown, this time for the state of Victoria, which is changing things by the minute and by the day. But at this present time, Victoria is currently in a stage 4 of lockdown. So that's just for context on where we are today as we're recording this piece, because things are changing very, very quickly. But in today's video, we're going to review the current economic climate. We're going to focus a little bit on some of the government stimulus packages. Then we're going to talk a little bit more about this second wave, and in particular, how we see it impacting the property sector, particularly down in Victoria. With me today, as always, we have Dave Hyman. He's our co-founder and CEO. So welcome back, Dave.
Thanks, Zara. Great to be here again.
We'll jump right in. As I say, we are recording this as Victoria is in stage 4 of their lockdown. And that's just, again, to give some context. But we've recently been given a little bit of visibility over the government's latest budget projections. Can you talk us through some of those highlights?
Yeah, sure can. So, I mean, obviously, you just have given the context around the current situation in Victoria. And it's pretty amazing to think these budget projections were put out sort of only 2 weeks ago. And the underlying assumption in most of them was that Victoria reopened after its 6-week stage 3 lockdown. But obviously that's certainly not the case. And the announcement over the weekend and the further clarification coming into the start of this week around what that lockdown actually means for citizens and residents of the state of Victoria means that most of these numbers are likely to change. One of the things that everyone should keep in mind is really it's a real watch and wait on a lot of these things now. Just given what's happening in Vic, there's a high chance that a number of these things kind of chop and change and move as the rest of the year and as we come into 2021 plays out. Despite my comments just then, some of the numbers that Treasurer Frydenberg touched on in his mini budget were pretty staggering. I think the headline number is the Australian government has committed $289 billion of stimulus to its sort of fight against the economic impact of the coronavirus pandemic. Those numbers are just staggering. For those of you watching who studied economics at school or university would appreciate the context that, you know, a $10 billion budget deficit in a particular financial year is something that most governments try to avoid, and for a government to spend $289 billion on these measures is just staggering. So how that translates into budget deficits. So obviously the coronavirus pandemic only started to play out right towards the end of financial year 20 or the 2019 to 2020 financial year, which finishes June 30 or finished June 30. And it still had a massive impact. So our deficit blew out to $85.8 billion when the government was originally forecasting a balanced budget or a modest surplus. So it's pretty staggering economic impact. And then as we fast forward out to 2021, that number blows out to $184.5 billion, which is really the $289 billion washing through the economy this year. And that's subject to, you know, all the things that we know to be true today. I think, like everyone watching, no doubt, I've got every finger and toe crossed that this second wave in Victoria is the last of it. But I think, as we know, this virus is incredibly contagious and it just spreads like wildfire. So we just got to sort of watch and wait. I think really, and those are the headline GDP numbers, but really the thing that is probably the biggest impact to Australia is the impact on the job market. So the unemployment rate, it's still pretty modest. It's still in the 7s now, and it's forecast to grow into sort of the 9s by the December quarter. Now, notwithstanding the fact that, again, Victoria, the numbers that have been sort of thrown around in the last 24 hours are 250,000 jobs this week to go based on that stage 4 lockdown, which is huge for a single state. It's a huge number. So no doubt those December forecasts will be revised up in the wrong direction. But really, when you think about the underlying rate of unemployment, when you sort of factor in JobKeeper, et cetera, it's certainly in the early teens. And whether that's, you know, 13 or 12, we don't know for certain, but certainly the government stimulus is really helping that unemployment number. To think that we were sort of in the 4s and 5s not that long ago it's come a long way, and I think it's going to take a long time for us to come out of this from an unemployment perspective.
You mentioned that the budget deficit is relatively largely due to the government subsidies and the stimulus packages, and there are quite a few, and quite a few of them, some of the bigger ones, such as JobKeeper or JobSeeker, have had some augmentations just recently. Could you walk us through some of those, just so we get a clearer picture of A, what they are, and B, some of those slight tweaks that have happened?
Yeah, I think one of the things that people were talking about before this mini budget came out was this cliff in September, where mortgage holidays finished and JobKeeper, etc., originally finished. I won't touch on the mortgage holidays just a second, but just in relation to JobKeeper, I think everyone sort of sighed a breath of relief when Treasurer Frydenberg announced the extension. So it's obviously a great thing. There are some changes though to the extension. So JobKeeper and JobSeeker are both extended to March 2021, so another 6 months, which is great. There are some changes. So JobKeeper payments slowly start to come down. So they're at about $1,500 a fortnight now. They come down to $1,200 a fortnight after September. So there's some changes there to the amounts being paid out. I do caveat this by saying no doubt that Treasury and Cabinet are having discussions right now about what this looks like for Melbourne, given this was done on a whole of Australia basis. So it'll be interesting to sort of watch and see what they decide there, whether that flows through, whether the state of Victoria is treated any differently. The other thing that was kind of one of the big topics around JobKeeper was, if you worked 100 hours a week or if you worked 15 hours a week, you got the same JobKeeper, and that was a big sort of point of contention. I think in retrospect, the government came out with this stimulus package really, really quickly, which was great. But often these small nuances get missed when these programs are rolled out really quickly. So that was sort of tightened up. And if you're working fewer than 20 hours a week, the $1,500 comes down to $750. So they've started to sort of stagger what JobKeeper means for different people. They've sort of flagged further payment cuts from January 2021 as well. The other changes as well announced recently were, in particular in New South Wales, just to sort of stoke up the residential property market, some changes to stamp duty. So obviously stamp duty is effectively a tax payable when you buy a house, and there was already some subsidies for first home buyers. Those have been increased to any new property valued at less than $800,000, stamp duty is waived on. So hopefully that'll start to stoke up that part of the economy and prop up the construction sector, which is obviously positive, while benefiting consumers who are looking to get into new homes.
Yeah, I think the stamp duty piece is really interesting, especially when you couple that with the potential for more flexible working and the opportunity for people to essentially move slightly out of city centres where those new housing estates are kind of going up. So it kind of opens up that as real opportunities for first home buyers. Yeah,
look, I think, I know this has been a relatively gloomy update so far, but I think if you take a step back and look at this from 1,000 feet, while the pandemic, both on a health level and an economic level, has been devastating so far, and we're certainly only in the first play, so to speak. I think if you take a step back and think about some of those topics, so the changed sort of ways of working, I think Australia has a really huge opportunity ahead of it, where we've always, there's always been the narrative about this wide, expansive country that we have with all this space, and everyone chooses to live in the few cities that are dotted along the coast, and we have sky-high property prices as a result. But what flexible working does is it means that in some of those beautiful regional towns that we have across our country, that maybe there isn't a lot of work in those towns in the traditional sense, but the future of work means that flexibility means that people will have the option now. Maybe you don't need to live in Sydney or Melbourne or Brisbane. You can choose one of those regional towns and maybe have no mortgage or a much smaller mortgage than you'd have. It just opens up possibilities, not only for individuals and building their family, but for Australia building out those regional centres, which is quite exciting.
Yeah, really exciting. And really great too that, you're not confined to a specific city or state anymore. So as you said, it was a bit of a gloomy beginning to the update, but there is, as we say, as you've gone through, lots of stimulus packages, particularly around the first home buyers. But, people are still worried about what this second wave is going to do to property prices. And I know a lot of people are kind of sitting on the fence waiting to see whether, the bubble will burst or the whatever other phrase they want to use for the property market to crash. There isn't necessarily signs of that just yet, but maybe you can share some of your insights around that with us.
Yeah, so I think one of the things that I think has been really pleasing through this process has been the lack of major falls in property prices around the country. So while Melbourne's in a second wave now, the whole country really went through this in March, in that in-person open for inspections and auctions were effectively taken off the table completely around the sort of back half of March. And when we look back at the data over those months, pricing, while there was declines, they're certainly not exaggerated. So I think the combined drops, and again, it depends on the capital city that you're looking at, but they don't exceed 2% over that period on an annualized basis. And when we look at what that actually means for either someone looking to buy or sell, I think I'll touch on sellers first. The dynamics that are playing out at the moment are relatively complicated, and there's a lot of moving pieces, but the property market or property prices, like most markets, are driven by supply and demand. And on the supply side, we've seen a continued low level of stock, and while stock levels have recovered since March and where they were in March, and they're at a pretty reasonable level now, considering the point of time in the year we are. Typically, winter sees a lull, but we've seen growth from March to July. Those stock levels are still, total stock levels are still down relatively materially year on year, and so that's helping on the supply side. On the demand side, while it's not unreasonable to think that the lockdown and the sentiment in places like Victoria specifically are going to impact demand, what the government and the banks have done around making it attractive for people to buy a home based on the price of money, we can't underestimate. So if we think about where mortgage prices were, even going back to the start of March, mortgage prices in March were around, for owner-occupiers getting a residential property, were in the low threes. And we're now seeing the lowest mortgage rates for those same customers at sort of 2.09%. And what that means is not only a discount of almost 1 whole percentage point, but on a relative basis, it's 30 or 40% cheaper from an interest perspective. So that's really driving demand up. And if you're a renter and you have a deposit, or you fit into one of the categories where there's significant help around deposit, first home buyers, the stamp duty exemptions, etc., there's a lot of tailwinds behind the demand side of the equation, which is really helping prices stay, I'd say, given the circumstances, relatively stable. So I think, yeah, it's certainly not panic stations from a pricing perspective. I think we can continue to see modest pricing falls, but we're certainly not predicting double-digit falls.
Well, that's a bit of blue sky in an otherwise relatively cloudy moment just now. There are lots of homeowners out there at the moment who are maybe worried about their financial position and just want to make sure they secure the best outcome. What are your 2 big tips for people to make sure they feel comfortable financially?
Yeah, so the 2 tips would be, first and foremost, just to reiterate some of the messages that we've sort of spoken about today, there's never been a better time to refinance your loan and make sure you're on the best rate. So the 2 tips off the back of that would be, firstly, have a look at what your lender's doing today. You can either do that yourself, or you can engage a home loan specialist to work with your lender. Typically, a home loan specialist is going to understand exactly what's happening across the market, not only with yours and others, and they can assist in your existing loan setup to make sure it's optimized. And if your existing lender isn't going to come to the table, there's never been a better time to refinance. And so if you have some level of uncertainty, obviously have that conversation, but certainly getting your loan structured in a way that means that you're saving money on your mortgage every month is only going to put you in a better position. So I'd say that if you've been sitting on the sidelines and waiting to see, should I do this, should I not? Even on the fixed rate topic, fixed rates are typically things in a falling interest rate market that you want to stay away from, but there's not a long way for things to fall. And so when you look at the difference today between a fixed and a variable rate, most variable rates are in sort of the mid to high 2s and fixed rates are at 2.09%. The underlying cash rate is 0.25%. And so even if it went to 0, which is unlikely, you're only going to see a 25 basis point fall. So fixed rates right now are very, very attractive. And the government's helping the banks through subsidising that for a big facility to keep those prices low. And Governor Lowe came out in his update yesterday saying that they're going to continue buying bonds to keep that cost of money down. So our strong recommendation is do something now.
Thanks so much, Dave. Once again, just so much information, but so useful for everyone out there, myself included. Thanks again for talking about these issues today.
No problems at all.
As always, we'll continue to provide these regular updates. If you are someone who is in Victoria or indeed in Melbourne in stage 4 lockdown, we're all thinking of you, and keep safe down there. If you want to subscribe to our channel, hit the bell and you'll get notified when we upload new content. And as always, lendi.com.au is always there if you want to check the market or check your rate with your current lender. If you are experiencing financial difficulties and are wanting a little bit more information on how you might reduce that mortgage stress, please check out our video here covering mortgage repayment holidays and refinancing. It gives you a little bit more detail around fees and charges and any additional things that you might not realize are associated with taking a mortgage holiday just now. But that's it for now. We'll see you next time. Thanks again, and stay safe, everyone.